Hey guys, welcome back. In this video, we are talking about the AMC squeeze, Citadel exposure, the swaps explosion, and many more in this video. Firstly, we're taking a look at this. Close to 60% of AMC volume hitting the dark pools on very low volume to begin with, probably nothing. So we've obviously talked about recently what has happened, and one of the main things you have to focus on is about understanding that currently, despite the market obviously seeing a lot of its big stocks all going down in value, AMC is actually doing the opposite. However, the main point of focus here is understanding that even in times like this, we are still met with dark pool volume. So it's a good thing that we are, of course, going up despite the market going down, but they are still suppressing a large amount of volume. However, this just confirms the fact that most people are willing to be investing into AMC. They're obviously confident in AMC, and that the buyer's sentiment and the buyer's pressure is, of course, still there for AMC. And that's a very important factor. Now, in terms of the technical analysis, and I want to do this and say this with, of course, a massive pinch of salt, you can see AMC 5.5 open Monday and squeeze Tuesday to 150. It's essentially talking about the technical analysis. Now, like I said, take this with a grain of salt. If you guys want to obviously believe it, feel free to do so. The things that I want to bring up is about understanding that when you take a look at the technicals, when you take a look at the fundamentals, AMC is shaped up very, very well right now. We are still obviously met with the manipulation as we are seeing, of course, the dark pool pressure still kind of piling in. But we talked about the fundamentals, obviously with the premium theaters and whatnot. We talked about the technical indicators, not just from this particular chart. We've obviously covered multiple things, you know, going all the way from, if you want to look at moving averages, RSI, OBVs, any other indicators that obviously out there, they're all showing good indications, even the options. But it's more importantly about what's currently happening to the shorts. Because ultimately, when the shorts blow up, that's when the squeeze will happen. And so as much as a story that can be told by the charts, I think it's more important to be looking at the short sellers of AMC. And there you can gauge, you know, in terms of what the squeeze will be like and when the squeeze will obviously happen. Firstly, you can see that, yep, there it is in plain sight. 944 billion in notional interest rate swap exposure. This isn't on Reddit conspiracy, it's in their own statement of financial conditions. Citadel Securities, as a swap dealer, is sitting on the derivatives powder keg so massive that even a minor rate hiccup or liquidity crunch could send shockwaves across global markets. And guess who clears a chunk of this risk? LCH, DTCC, UBS, now paired up with reverse repo spikes, UBS reallocation fears, short exposure in GME and AMC, DTCC's disaster recovery test today, and a rising yen nuking carry trade, you get a full-blown derivatives volatility event brewing beneath the surface. They don't want you looking here, but you are. So one of the things that obviously, if you're in the community of apes for AMC or for GME, you obviously understand what's happening. We covered this in past videos as well. But it's essentially understanding just how much exposure is at risk right now with these funds. And more importantly, the funds that's got to do with AMC and GME. When you take a look at some people that are obviously affiliated with AMC swaps or AMC shorts, you have Citadel, you have UBS. Now, when you take a look at what's happening to them right now, they are both not in a good position. We've obviously talked about Citadel and how, firstly, the 944 billion in notional interest rate swap exposure. We talked about the open short positions that they have, but more importantly and recently is about understanding how they have to be forced to close some of their over leveraged positions. So that's already a big sign that the market is extremely risky right now and they can't go to their usual practices, and that some of their positions are extremely risky and losing a lot of money, therefore they have to close. The second thing is obviously how we knew that they actually went through February with a loss and also March with a loss as well, and are on track to do so with another loss in the month of April. And so firstly, when you pair this up, you already see how one short seller of AMC is not in a good position. And so that's the first part. And then is obviously talk about UBS. Now, UBS is, of course, another short seller of AMC in terms of the AMC and GME swaps that they hold. Now, this was obviously inherited with our kohrs and Credit Suisse, but nevertheless, they are, of course, in possession of these swaps. And now what we are seeing is massive amounts of worry. You can see Switzerland's main banking lobby is doubling down on UBS' threat to leave Switzerland if regulators impose stricter capital requirements on the country's biggest bank. So we talked about how recently there has been an increase in capital requirement for UBS. Now, you have to understand, they have been affected by these toxic swaps for a very long amount of time. They're obviously taking massive losses. They don't have the money to, of course, meet these capital requirements. And if you want to take a story in terms of the timeline of what's happening, you can see Swiss National Bank is worried about UBS collapse, and since these has watered down Credit Suisse has been locked up for 49 more years, we'll have to sit and watch. In September, why haven't Swiss officials already instituted higher capital reserve requirements for UBS? And then meet the Swiss regulator who wants to increase the UBS capital requirements by as much as about 25 billion. And then Swiss regulators are very worried about UBS. Now, of course, on this channel, we have covered everything that we've talked about in this video already. Obviously, whilst it isn't exactly what's being talked about here, it is something that if you do watch, you will understand exactly what we are talking right now. And so all the information here that we just covered has been talked about in previous videos. But essentially, if you guys don't understand what's happening, is essentially how this has obviously been a very long time coming. But now it's coming to the point where we may potentially be seeing the first major AMC swaps sellers, the holder even, to actually go bankrupt. And these AMC swaps are what we talked about in terms of the reason for why we are not able to see real price discovery of AMC. They are also the catalyst for the AMC squeeze, because if these swaps explode, it won't just affect UBS, but it will affect everyone that's affiliated with, of course, the short positions of AMC. So whether you're looking at Citadel, Virtue, Goldman Sachs, or any others, they will all be affected. And if you want to take a deeper look in terms of what's happening right now, you can see why did those big banks say when asked about the health of their trading operations, that what we can see is how these trades was blowing up, forcing investors to sell, and that this is what's happening in the market right now. So we've gone from institutions are losing money, so the short sellers, to how banks are also losing money. Now, yesterday's video, we briefly covered about how when banks start to lose money, that will be the start of the squeeze. Because if banks are in the positions where they no longer have the money and they may become or they will face the possibility of default, they will recall their loans. And that's why one of the main focuses on banks is, of course, Bank of America. Because Bank of America is the prime lender of Citadel, who then uses the large amount of money to obviously short AMC. And so if we were to see Bank of America in that position, you can obviously understand why these AMC short sellers will start to panic, but also why AMC squeeze will happen if we were to see Bank of America default. Now, of course, they aren't the only ones. There are, of course, other banks that are involved as well. But considering that Citadel is one of the biggest short sellers of AMC, that's why we're putting the main focus on that area. You can also see the Federal Reserve absolutely ready to help stabilize market if needed, top official says. And now this is something that we've seen in the past before. When we saw the fact that AMC and GME situation first got out of hand back in 2021, we saw how the reverse repo shot up to $2 trillion. Now we're in that same position where the Feds are realizing that the synthetic issues has once again gotten out of hand, and that potentially, if we are understanding their wording correct, they're willing to put another $2 trillion. However, what's different this time is about understanding the fact that we are also in a time where massive amounts of money are disappearing from the market. Massive amounts of institutions are leaving the US market, so no longer have that liquidity. And that synthetics issue is way bigger now than it was back in 2021. And so if that were to be the case, even if they were to put $2 trillion into the reverse repo, it won't be the same as they did back in 2021. They'll have to put a lot more money in. But then at that point, the question to be asked is, are they willing to put even more money into the reverse repo? Or are they willing to give up one or two firms to make sure that everything is covered. Because what we are seeing is that when the squeeze happens, hundreds of billions of dollars will be transferred from the institutions to the retail, to the apes, and then that will be the whole situation over. It's just a matter of if reverse repo, or rather the feds, are willing to do so. Now, again, the money may be hundreds of billions, or it may be trillions. It depends on how big the synthetic issues is. And guys, thanks for watching. I'll catch you guys next time.